Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager for GDM. Today's outlook, we start with Asian stocks. With the exception of Australia, Asian stocks marked recovery from a lackluster open to rise on Monday as a modestly positive lead from Wall Street offset the impact of sliding oil prices. China's benchmark Shanghai Composite Index clinched a fresh 7-year high as markets interpret comments from the governor of the People's Bank of China over the weekend as indication of further stimulus. In Japan, Nikkei 225 index closed up in choppy trade late yesterday on Monday, recovering from initial losses reduced by disappointing factory output data released before the market opened. Looking at the industrial production, dropped 3.4% in February from the previous month, marking the biggest drop since June last year. The result, compared with expectations from a 1.8% decline and a 3.7% gain in January. The yen also declined versus the US dollar and now is traded below the 120 level at 120 yen per dollar. European equities closed sharply higher on Monday, having extended gains throughout the session as investors looked ahead for the upcoming US job data. The pan-European Euro Stoxx 100 index closed around 1.1% higher, with a broad-based rally across all major bourses. Looking at the German DAX, provisionally closed 1.8% higher, with auto technology and chemical sectors all climbing higher during the session. The French CAC closed unofficially 1.1% higher, while the FTSE 100 finished up 0.6%. The shared currency, however, declined yesterday with about 60 pips to 1.082. Today's opening sent the euro further down with another 80 pips, aiming for our second target, just before the important European data. Commodity sector, looking at gold, edged lower this morning and was heading for a second straight monthly fall, pressured by expectations the US Federal Reserve will increase interest rates later this year. Bullion has fallen near 3% since hitting a 3-week high above $1,200 an ounce level last week, as the dollar gained after Federal Reserve Chair Janet Yellen on Friday signaled a rate hike is well on the central bank's cards later this year, citing sustained gains in the U.S. economy. However, Yellen's remarks halted gold's longest rally since 2012, and of course had been spurred by hopes that Fed would hike sooner than later. Now the price is now aiming for our second target, lies around 1177.76. Oil futures extended losses on Tuesday as Iran and sixth world power ramped up the pace of negotiations to reach a preliminary deal that could ease sanctions and allow more Iranian crude into the market. With a deadline less than 24 hours away, United States, Britain, France, Germany, Russia and China were trying to break an impasse in negotiations aimed at stopping Iran from having the capacity to develop a nuclear bomb, in exchange for an easing, of course, in international sanctions. Crude oil closed yesterday's trading session well above the $48 a barrel level. However, today's expectations drop the price with 60 cents down to 47.82. Our target at 46.95 remains untouched in the near term. In the calendar today at 7:55, German unemployment rate at 8:30 UK GDP. Half an hour after that, European Consumer Price Index and of course unemployment rate at 14, US Consumer Confidence. All of that with high volatility expectations. Follow up that on our economic calendar. Thank you for watching. See you next time. Bye-bye.